Hi everyone, I'm Regina at Ace Plus Tax Resolution. Our firm's head is a CPA dealing with the IRS for over 30 years and also a certified tax resolution specialist. We help taxpayers resolve their tax problems with the IRS and states. If you're experiencing any tax problems and questions on how to get away with bank levy, wage garnishment, passport problems, refinancing or selling your house under the tax liens, email us at james@aceplustaxresolution.com. Do you owe taxes to the IRS and are afraid that you may have a tax lien placed on your property if you have? Watch this video to find out what options you have. Before we jump into this important information, please make sure to share this video with someone you know and subscribe to our channel so you don't miss any valuable information or updates. A tax lien is a claim against you whenever you owe taxes to the IRS or state. When a taxpayer fails to pay a tax liability, the government may use a lien to secure its legal claim to the taxpayer's property for the amount of the unpaid balance. Legally, a tax lien happens when any person fails to pay the tax after the IRS makes a demand for payment and the taxpayer still fails to pay within 10 days. This is referred to as silent or secret lien. The IRS may send you tax bills that show the amount of taxes you owe and demand payments. If you don't respond to the notice by making a payment and you owe at least $10,000, the IRS may show your lien in the public records with how much you owe. Not only that, having tax liens can have a negative effect and can complicate financial matters, such as selling a property, refinancing a home, or even getting hired. A tax lien that shows up in the public records may make it difficult for you to refinance or get loans from potential creditors and lenders, since they will know that the IRS or state has a lien filed on your assets and properties. The notice of federal tax lien is in effect until the tax debt is paid in full, the liability is no longer due, the collection statute has expired, the taxpayer obtains an offer in compromise and pays the offer amount in full, or the liability is discharged in bankruptcy. Currently, the IRS will make a lien determination if the taxpayer owes more than $10,000. However, taxpayers that owe between $10,000 and $50,000 may avoid the lien by entering a streamlined installment agreement in a timely manner. There are several methods to deal with liens. First, you may need a lien release, which removes the government's interest in the taxpayer's property. The IRS is required to issue a certificate of release of lien no later than 30 days after one of the following events occur. The tax liability is paid in full, or the tax liability is no longer collectible. In other words, the collection statute of limitations on collections has expired. Or the IRS accepts the bond of a surety company, or payment of all taxes owed is to be made no later than 6 months before the expiration of the collection statute. The taxpayer delivers a cashier's check to the IRS and receives a certificate of release of tax lien. Second, you may need a lien withdrawal, which is removing the notice of federal tax lien from public record. People are often confused how a lien release is different from a lien withdrawal. The IRS grants a lien release only when the taxpayer satisfies the balance, or the collection of tax is no longer enforceable, such as when the collection statute expires or the tax is removed. If a case can be made that the withdrawal of the lien will facilitate payment of the tax liability, or is otherwise in the best interest of both the taxpayer and the government, then the government may open to this. Another case where a lien withdrawal can be applied for is when you have entered into an installment agreement to pay the back taxes, and the agreement did not mandate that a lien be filed. A payment plan where the payments are directly withdrawn from your bank account. In these cases, you can often get the lien withdrawn as long as you are current with your payments and other tax obligations. Through a lien withdrawal, they're able to remove their lien from the public record. Third, you may need a lien subordination, which is allowing for new financing that will ultimately help pay taxes owed, such as a second mortgage, refinance, home equity, or debt consolidation loan. Third, you may need a lien subordination, which is allowing for new financing that will ultimately help pay the taxes owed, such as a second mortgage, refinance, home equity, or debt consolidation loan. Taxpayers may need to access to credit equity or to change loan terms to facilitate payment of the tax. However, lenders may not be willing to make any changes to financing if the tax lien has been filed. In these cases, the taxpayer would require lien subordination. Subordination is the act or process by which one person's rights or claims are moved voluntarily to a position ranked below those of other claimants. Subordination does not remove the lien but allows another lien to take priority over the federal tax lien. The IRS will only consider lien subordination if it is in the best interest of the government. That is, if the lien subordination facilitates the payment of the tax. There are other conditions where lien subordination will still be approved, even if the IRS isn't going to obtain direct proceeds from doing so. For example, many trucking companies will finance their accounts receivable through a process called factoring. In factoring, a lender pays the trucking company some percentage of their accounts receivable, usually 75% to 90% upfront, and then the lender takes the responsibility of collecting on that account receivable when it's due, usually 30 to 90 days down the road. This way, the trucking company owner gets money now so that they can buy fuel and make payroll. When a tax lien is filed, most factoring lenders stop funding. In that case, the trucking company suddenly loses all its cash flow. In order to enable the funding to continue, a lien subordination can be obtained that move the tax lien to a position below the factoring lender, thereby protecting the lender's claim on those accounts receivable. Tax liens must be addressed as soon as possible and be taken care of with the assistance of a competent tax professional. At ACE Plus Tax Resolution, we can negotiate and settle with the IRS to obtain relief from the federal tax lien in the best interest of the taxpayers. We have many successful cases of resolving tax lien problems. Our professional team can help you get release of liens. Thank you for watching.
Our certified tax resolution specialist here at ACE Plus Tax Resolution has more than 30 years of experience in dealing with the IRS. Our firm helps both individuals and business taxpayers resolve their tax problems with the IRS and state through custom fit solutions. If you have any tax problems, please contact us. Our information is down below. Don't forget to hit the subscribe button to our channel so you don't miss any of our timely videos with valuable information and advice.